Yo, we're back with another one. We're gonna go over what trade we took and how you could have took this trade for yourself and executed on our New York session trade. Uh, so yeah, first of all, daily is bullish. How can we tell that the daily is bullish? Simple. We look at daily structure, break of structure to the upside, 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 continued breaks of structure to the upside. Right. Next thing, 4 hour time frame. 4 hour time frame is what? Is bearish. Okay, slow down, slow down. Get that it's bearish, but mind you, what are we trading? We are trading New York Open. So let's mark New York Open up. It's 8 a.m. EST, right? So what does that mean? Our 4 hour order block would start right here. This would be the body of the order block, right? Scale down to the hourly. That's exactly what happens. I'll show you guys the session splits so that you guys can understand what we looked for. This was the 4 hour break of structure right here. I'll mark it out so for you guys to see. Right? Mind you, daily is bullish. And guess what we see? We see a mitigation of the order block that was made for the extension downwards in what? Pre-New York / mid-London. And what can we see happening in there? Obviously, there's no hourly break of structure, and you guys can clearly tell that from what we saw right here, right? And then on the 15th, you can also see what? We react, but no breaks of structure, nothing really insane going on, right? So what do we observe here? Come into New York Open, mind you that daily is bullish. We can look at what? Specifically, this low right here, right? That would have been our break of structure to the downside, which we never got. And we also had this low right here, right? Okay. So what does that tell us? Mind you, we also have this fair value gap. So what does that mean? This is the furthest fair value gap we have. We scale down to the 5 minutes to also get further details, right? So this is a fair value gap. This was the order block mitigation that ended right here. So mind you, on the 15-minute, this never broke structure. We're good. It broke structure right here, coming into New York Open. Cool. Let's calm down right here and let's see exactly what's going on. Our 15-minute just barely broke structure right here. Our hourly is bullish. Our 4 hour is not reacting off of the bearish order block. And now what we expect is what? Bullish hourly, bullish daily, 4 hour not respecting price action that says that we're supposed to be bearish. So that means that we're what? Bullish. 15-minute broke structure to the downside, but just barely. So what can we need to invalidate this 15-minute break of structure? This what? Fair value gap, right? But you know what? What gave me the entry was this. 15-minute said what? This was the accumulation area for this expansion here, right? This was the only fair value gap within all of here that has not been mitigated except for this one here you could use, right? So price has been pricing extremely efficiently. So what do you want to look for? We swept these lows out. We broke structure to the upside internally. We're going to find exactly where that happened to. So we have 5-minute structure that we want to see break this high, which it did, right? But for us, what would invalidate it? Easy 15-minute liquidity sweep, right? And mitigation of that last fair value gap. So we take a key price area out that we like to see, and we get a break of structure off of it. That's all we need. So as I see this break of structure here, off of this key area, right? Which is what? Our fair value gap. We observe what? This break of structure, and we execute on it. My execution was likely around here. Out here / here, but let's call it here. I'll show you guys exactly what was there. And stops under what? This low. And you're probably wondering why the stops were there and not higher. And I can understand why you're saying that, but I'll give you guys the reason. And the reason is very, very simple. The reason is the fact that had I had stops all the way here, and I was just targeting London session highs, right? Sorry, the base of this order block right here, right? Or 50% of this fair value gap, whatever it was. What up, guys? So we're back with another trade recap. So I'm gonna show you guys how you could have executed on this trade that made me nearly 4R today, and it was a very simple trade, and you guys are gonna see how you guys could have done it. So firstly, we're just gonna start with the basics, right? What was happening on the daily time frame? Shit, we're still on the 4 hour. Okay. On the daily time frame, we are clearly bullish. Is that fine? Yes. Bullish break of structure, we're bullish. Okay? Period. 4 hour. What do we want to do here? If we're bullish on the daily, ideally we want to find excuse that, man. Apologies. So you want to see bullish PDRAs get respected and bearish PDRAs get disrespected. Makes sense? So what do we do here? Mark out our bullish PDRAs. What's this? This, we could go down to the hourly so you can see it more clearly, and then we'll go back to the 4 hour. This was the last leg down that created this giant expansion upwards. So what does that make it? An order block. Yep. See? So when you look at it here, people will say, oh, this did not break structure. It's not an order block. Blah, blah, blah. Shut up. It is. Okay? Moving on. It's also a fair value gap, just in case you guys can't see that and you guys don't want to say it's not an order block. It's half of a fair, it's the mitigation of a 50% mark of a fair value gap. Okay? That's good and well. Now let's move on. So we tap into an accumulation zone. Got it? What are we internally? We are internally bearish. Granted. But we are reacting off our bullish PDRA with an internal bearish structure. Right? So what does that tell you guys? We want to go internally, meaning to lower time frames, to see internal what? Disrespecting of those bearish PDRAs. Like what? The 4 hour order block that causes internal break, which is what? This thing here. This entire move up right here is what caused this break of structure down here. What do we see throughout London session? Disrespect. We come into it, try and react, do BS, actually react off of. We come into this order block, go back to the bearish order block that's right here, just so that I can clearly mark this out for you guys. This. Yup. When it's not a perfect line, it just seems to piss me off. Cool. So this right here, right? We react off of it, but only to do what? Continue respecting the bullish PDRAs we made. We had a Frankfurt open sweep, leading to a change of character on the hourly, right? We reacted off the bearish order block that caused this move down, and we continued upwards. So what does that tell us? We are what? Bullish. So what do we see coming into New York Open? We see this 15-minute fair value gap. That was the only thing that was left that wasn't properly filled in. Everything else here, as you can tell, is properly being filled. So what can we think of as smart traders? We will also fill this fair value gap in very well, and this will be a minor inducement. In fact, let's get down to the lower time frame so we can really understand where this imbalance clearly is, right? Well, guess what? This imbalance right here was actually filled with this candle internally, right? On the lower time frames. I like to see clear imbalances that have not been touched yet. So what does that mean? We could actually pinpoint this down all the way to here, which is what? Also a 3-minute breaker. Got it? But let's get back to the 5-minute. Let's not complicate our lives. We mitigate this fair value gap. And what does this mean? Odds are what? This is an inducement. People have thought that this was the mitigation before the expansion. So what do we see here coming into session open? What? Maybe, 30 minutes into session open. On news release, we see what? A mitigation of the fair value gap and an immediate flip. What do we do here? We what? Inverse this bearish fair value gap that was made right here. Right? So what does that tell us right here? We are clearly what? Bullish. Right? So scaling down, actually, I'll leave one more thing here. internally, we also want to make sure that we're safe here. So what does that mean? I'll get into this detail actually. This was what gave me the confidence to take this trade. So you see, I could have said that this was the bearish order block, which it was, but I also said, let me consider this right here, this last up move. So sometimes this is too big of a move to be the order block. It just becomes more of reacting off of this business. So what does that mean? I also considered this. So I'm continually preparing myself for all possible outcomes / scenarios, right? So that's when I said, cool, let me get down to the 5 and exactly try and understand what's going on here, right? So when you get down to the 5 minute, what can you see here? 5 minute internally break structure before session open, mitigates the order block that caused that break of structure, reacts off of it, right? And what do we see? We see a liquidity sweep off that what? Break of structure. And people are thinking, break of structure, order block mitigation. Let's enter on this minor high that gets revisited and let's send this thing all the way back down, right? What am I thinking? No, we just disrespected the 4 hour bearish order block that was made. Hourly structure constantly being what? Priced efficiently. And what do we also have? We only have one 15-minute PDRA that keeps us bullish that has yet to be mitigated. So I would like to see some form of a liquidity sweep that happens on that specific 15-minute PDRA, which is what? This fair value gap, which is also aligned with the what? The 5-minute. Because there's no other fair value gap in here that's in play. So how beautiful is that? While everybody thinks, oh, news just sent us even lower. I'm thinking, no, news got you, all of you sell stops, all of you buys stopped out right here. And what are we going to be doing? Sending this higher. So what happens here? Fair value gap gets inversed, right? And what am I thinking at that point? This is going to be an easy ass bearish day. Because when I saw this get inversed and us mitigate this, I was good to go. When I saw this break of structure right here, that's when I said, I'm good to go. I expect this to actually be short-lived and this to be inversed. I could have also entered on this fair value gap mitigation right here. This is the fair value gap, as you can tell. But I was in chop central for a while right here. But that's where a key lesson is. Whenever you're in top central, don't forget, respect what? Your trading plan. Once you are in a trade and your analysis is sound, see the result. Why? You don't want your future expectancy to lower because you had to get involved in between the resulting outcomes. So what does that mean? Once you enter a trade and you followed your rules, let it play out. If you don't hit a take profit, you don't hit your stop loss, leave it the hell alone. Most of you guys see your trade go into drawdown and you want to close it. Most of you guys see your trade go up and down a profit and go near break even and you close it. Not smart. Because what happens when you usually tend to do that? It's as if the market knows, right? Just go straight to your take profit the moment you close it. So what should you learn from that? Always let your thing play out. Restrict yourself even for the good and even for the bad so that your results are predictable. Moving on. Let's talk about take profits right here and let's finish this video off. So we had our first take profit at a little bit higher than this first order block because I knew that we had this massive fair value gap and I could safely squeeze out at least this low, maybe not the body over here of this order block. And then I targeted the closing of this fair value gap. Could have likely targeted the body of this bearish order block. But then I said, let me also target what? Previous day's highs. And that was enough for me. I also had a higher target, but I told everyone in the Discord that I'll be closing out here considering that it was Friday and it was already 11. And this trade played out very, very well. As you can clearly tell, we hit a beautiful 1 to 3.5 today. This says 1 to 6, but as you take partials out, what happens is you have less risk to reward. But guess what? That increases your win rate astronomically because you never have to be 100% right on your analysis. You could be, say, 50% right and have price play out for a little bit and still make money. You know what I mean? And by doing that, you'll protect yourself from many, many unnecessary losses, and you'll even make money on days where you're not even fully right, which sounds really great to me. And yeah, that's this one. Follow, like, and subscribe, and make sure to join the Discord because literally come tomorrow, I actually have a weekly recap and analysis session with them, and all these people are going to be joining, and we're currently about 17, 19 members strong. So yeah, join. It's free. All of my trades are in here given live. And I also do calls with you guys for free. We have people who are about to pass their funded challenges. It's all free. So join, and I'll see you guys soon.